ended up launching Blockchain Founders Fund after exiting my last business in the space. The need to continue to train AI. If you were to model out like what does human advancement look like, this concept working, how it works, how you sort of bring people in and incentivize them around like some sort of shared goal or incentive. If you need to think through like market makers, if you need to think through exchanges, if you need to think through like KOLs, like things like this that
Hello everyone, welcome to the Crypto Show by Coins Capture. Today we have Ali from Blockchain Founders Fund. Welcome Ali.
Thanks so much. Glad to be here and thanks for having me on the show.
Great. So now, not Ali, not a Blockchain Founders Funds need an introduction, but we'll start with your intro. Just tell me about your journey, Ali, and how you founded Blockchain Founders Fund and all.
Yeah, absolutely. So I guess for context, we run Blockchain Founders Fund. I'm the managing partner there. We invested and help venture build top tier startups. We've got now over 150 portfolio companies around the world in the space. And simultaneous to that, also, I've worked pretty extensively with the United Nations around blockchain and crypto and how that can help achieve the UN Sustainable Development Goals and help alleviate poverty. Also worked with INSEAD as a blockchain fellow to help establish, case studies and materials and an approach, for the next generation of business leaders. In terms of how we started Blockchain Founders Fund. So back in 2017, ended up launching Blockchain Founders Fund after exiting my last business in the space. And it was a completely different world at the time, right? So take 2017, you had, the start of the ICO boom, very different time, very novel, of course. With the ICO boom, you had, any and every project more or less raising massive dollars if they had a set of advisors on there. And, a lot of those projects, I think, as many know, didn't really pan out, right? A lot of those projects, I mean, some did, right? But many of those, I think, really took advantage of this new novel concept around tokens. I think made promises they knew they could deliver or thought they could deliver, but not with maybe any substance. And that sort of was back in 2017. Obviously, the industry's matured a ton since then, right? There's still things that we need to improve, but a lot has changed, I think, since the time that we started Blockchain Founders Funds back in 2017.
Great. But at that time, it was more of an ICO boom at 2017, so we can understand how it could be.
Yeah.
So with the growing thing about funding in the Web3 space, so how is Web3 funding space evolving, and what are the overviews about it?
Yeah, absolutely. So, I mean, if you go back to, and, over how it's evolved, right? So if you go back to 2017, one part was the ICO boom, one part was things like, say, security tokens, right? Which sort of emerged in that market. There was even the launch of like certain AI tokens and like other things that like were very novel, interesting, but maybe still a bit far-fetched at the time. Fast forward, a lot of that's matured. Some mega players have come out of that. And now I'd say you've got a lot more, there's still a lot of themes that are interesting for an investment perspective, but I think you've got a lot more maturity around it. So take for example, decentralized physical infrastructure, right? So DeFi, pretty hot narrative right now, but there's definitely some merit to this concept working, how it works, how you sort of bring people in and incentivize them around like some sort of shared goal or incentive. If we think about some of the biggest problems in human society, right? Take, for example, the need to continue to train AI. If you were to model out like what does human advancement look like, probably a lot of that's going to be modeled out to how fast does AI continue to improve, right? Over the longer run. And so if you were to take then, for example, potentially a play around how do you decentralize compute power or GPU power to train AI, this is a huge opportunity, right? So there's more unused GPU capacity than the world's biggest supercomputers, right? Just take everyone's GPUs at home, and if you were to combine all of that power, you probably have substantially more than the world's biggest supercomputer. So how do you unlock this growth? And does blockchain end up at the core of that? And does that sort of create an interesting, say, like deep opportunity? And so there's really interesting things like that. Obviously, AI has been a hot topic, both within Web3 and outside of Web3. You've got a number of other things right now that I think are pretty hot in Web3. So, for example, Bitcoin narrative, and how do you make Bitcoin, the choice, like the chain of choice, right? Instead of it being Ethereum or others. Now, there's a lot of opportunity, in this space. I think a lot of room for improvement right now.
Going with the trends which you said about dipping and AI. So just to let you, like in the last previous cycle, it was more about NFTs, Metaverse, and now it's about dipping, then of AI, and then it's about RWA. So what do you think? How it impacts the funding side? Does it impact the projects, and how the trends can be kept?
Yeah, so it definitely impacts the fundraising cycle, but keep in mind, like, these come around, right? So generally when you have some new innovation, there's going to be almost like this hype cycle that takes off, right? And maybe it's too early for the actual maturity of that, right? So we mentioned security tokens in 2017. But like, if you really think about what a lot of the RWA segment is, it pretty much started from the security token movement in 2017. It went through a lull period, ERC 1400 was written, all sorts of other standards that are now the RWA standards. And now RWAs are taking off. And now there's, involvement and interest from some of the biggest players like BlackRock and others. And so a lot of this is still needed, right? So if you didn't have what happened in 2017, you probably wouldn't have RWAs today, right? Because you wouldn't have that infrastructure, that setup, you wouldn't have ERC 1400, you wouldn't have all these different sort of pieces that laid that foundation out. And so I think in a similar way, some of the things right now may be hyped, right? So you may have AI more hyped than in some ways, but it's going to come around, right? Like AI is moving at an incredible pace that it's going to catch up, and it's going to have the impacts that I think people are looking at today, but maybe it takes a few more years. Maybe it takes, a little bit longer than people expect, but it does impact the fundraising cycle. There is, we definitely see it in our portfolio where a lot of founders are able to raise, much easier when they're building in these trends. Having said that, do you always need to be building in what's hot today? Like, not necessarily, right? Like, even when we think about investing, we're also looking at like, well, what's going to be hot tomorrow and the next year and the next year, and like, what's the right time to enter onto those, and what does that look like, right? Because obviously you could always be too early as well, but there's still a foundational aspect that's important that comes with, also investing early into a theme.
So what advice, what do you think, like the new founders in the Web3 ecosystem, what advice would you give when they are planning to raise funds?
Yeah, I mean, at the end of the day, like, you should be building a company that you're passionate about and that you really love, right? Because otherwise, how are you going to win at something that you're not passionate about and you don't want to work on 20 to 24 hours a day or think through 24 hours a day? I mean, like, it's a competitive space, whether you're in Web3 or you're not in Web3, right? It's competitive. So you got to be building something you're passionate about. I mean, in terms of raising funds and some tips around raising funds, I mean, now of course, it's a great time for founders to be raising capital, right? Having said that, there's just a lot of projects raising, right? Every fund we know is probably looking at 100, 200, 300 projects at a time or 500 projects at a time. And so there's a lot of noise right now as well, right? So figure out how to stand out from all of that noise. And that can be in a number of ways, right? Of course, if you can showcase like, what the team has done before, why you're going to win, prove that you're moving faster than others, right? So if there's anything that you can show that, demonstrates you're sort of moving at a rapid pace, you're innovating, you're sort of building, you've got interesting traction. Like any of these things are obviously going to help you stand out. And then find some key funds or angels that are going to signal, to the market and help you bring in like other key investors as well, right? So I think that's all part of the formula.
Correct. As you said, that you review more than 300, 400 pitches every maybe days or weeks, basically. So what are the common mistakes what founders do when it comes to pitching or like the overall pitch decks? And
Yeah, so there's plenty. I think some of the easy ones, right? It's like, if you can't explain what you do very easily, like no one's going to understand what you do, right? So you see these pitch decks that are well over 11, 12 slides, and most of the time they don't need to be, right? And I'm not saying it's a hard and fast rule that you need to be 12 slides, but you need to be able to explain what you do succinctly. And a lot of founders, because they can't do that themselves, their pitch decks end up being 20 slides. And so this is like one of the key problems. You can actually check out a tool. There's a really cool tool at pitchleague.ai. So you can just type that into Google. And there's a tool where you can actually submit your pitch deck to an AI tool, and it actually gives you a bunch of feedback and it helps you improve it, right? So that's a quick way to get feedback. Run it by other advisors, friends, supporters of the company. That's like an easy one. I think taglines on the top of your slides is very important. So if you can, make this a lot easier for someone to follow, I think that's always a good thing. As much as you have like key things that you want someone to know, that should be in your pitch deck, right? Like all the main hooks that you want in there should be in there. And a lot of founders will skip these key things. So I think that's something to really like put your best foot forward. And then work on reaching out to, key investors, like I mentioned, right? And then have that as sort of a catalyst to drive this. Keep in mind, I guess, like the biggest thing or biggest misconception I think around decks is people think that a deck is for investment, right? And it's really not, right? Like no one's seeing your deck and sending you money. Like your deck is really for getting a meeting. And so you don't actually need all of the details in there as well. Like you need enough that it's like exciting, but you don't need too much that's complicated. There's a lot of businesses that may have some layers of complexity, and you may want to figure out how to streamline it so it's simple in your deck, and then you can explain the complexity on a call or otherwise, because otherwise it's just not coherent when someone's looking at it for the first time.
I think you have cleared a lot of things for the audience and most of the founders, how a pitch deck and how you should interact with investors. With that, do you think a token plays a major role when it comes to investing in Web3? And is it important for any project to have a token?
Yeah, so it's a good question. We get this a lot, actually. So, a token can be very valuable, right? So if you think about what a token really represents, is it represents like essentially like the power of that community. And this can be very interesting because it can, one, help you jumpstart and really rapidly grow that community at essentially a negative CAC, right? So you have like one period in your company's history where you're going to have this negative CAC, and it's when you launch a token. And so it's like, so CAC is, cost of acquisition, right, of a customer. And so this is actually very valuable and very interesting as a concept, right? Now, having said that, a token can also be very detrimental to a business, right? So if you launch the token and end up not being able to sustain, the price that you launched at or the price the public came in at or things like that, it can actually become very detrimental. So take, like, for example, imagine you're an iPhone user, right? And, when the stock price of Apple goes up or down, you don't really care as an iPhone user, right? So you're kind of indifferent. Now, imagine though that like every single one of the Apple users were like directly financially linked to Apple's performance, right? And Apple's performance kept going down, as an example. Now, you would probably be like, oh my God, this is a scam. I'm losing my money. I'm losing a lot as the price of Apple shares are going down. Even though you're a user of the product, you're also financially linked to the performance of the asset. And so this is where I think you end up with this very big problem in Web3. And a lot of people launch tokens in these bull markets and it completely backfires in a bear market, right? And it can actually kill a very good business by having a token. So you do want to be cautious on launching a token, thinking through it, making sure it's the right thing for the business. Because the worst thing you want to do is take a really good business and then kill it because of a token, because the entire community and user base is really frustrated with you, right? Because of the performance of the token, not even the quality of the product, right? And so you got to be really careful with some of these things. It can be valuable, but there's definitely some major drawbacks here to consider.
So I think token and the timing, everything needs to be aligned when to have a token, or is it important to have a token, right?
Yeah, definitely on that. And even, if it makes sense for that business, right? Because it can be pretty detrimental to a good business if it's done incorrectly or poorly.
Correct. With that, like, what is the right time, just to understand with, like, for the audience and so on, what is the right time for any founders to raise funds? Is there any stage, or like can pre-revenue stage as in projects can raise funds?
Yeah, I mean, we invest in companies all the time, right? Like, so it could be anywhere from pre-revenue to product just launched, but pre-revenue. It could be pre-product, pre-revenue. It could be pre-revenue, but they've got a product that's just about to launch, and like you can already like look and feel it and use it. It could be just after there's some initial revenues. I mean, at the end of the day, there's investors at every stage, right? So you're gonna have your angels and your pre-seed sort of coming in at that like just product launching or pre-product sort of phase. As you get further along and you've got some product traction, you're going into your seed round and you're proving out, product market fit entirely, and, getting over any false positives, stuff like that. And then, as you prove out, that seed stage growth and you've got, some decent numbers, then you're going into your Series A, right? So there is investors at all of these stages. I mean, we invest anywhere from pre-seed to Series A. And so, we cover that entire spectrum. Obviously, there's differences then in like expectations of valuation, given like the risk levels and the stage of the company, et cetera, right?
With that, I think let's come to how blockchain founder fund help any project. What is the process? Who can apply for your funds, and how is the process go?
Yeah, absolutely. So, we're extremely value add and like hands on with our company. So it's fairly different from a lot of other funds. I think there's a few different expectations, I think, as founders that you can have, right? So, a lot of founders ask me the question like, hey, should I only take smart money and only super high value add investors? I think it depends, right? Like, obviously as a value add investor, we'd say yes, but I think it really depends on your options as a founder, right? If you know what you need to do and you've got a pretty good sense of direction for the company, then really you kind of need the money as first and foremost. So if you don't have options and you've got, the only option is, money that's not strategic, like probably still worth taking, right? Then, in the Web3 space, I do think strategic money becomes more valuable because there's a lot of relationships, a lot of doors when you think about everything from needing to think through, if you need to think through like market makers, if you need to think through exchanges, if you need to think through like KOLs, like things like this that end up adding value to say like potential token launches, then like you need to see like who's actually value adding on that front. So what are they actually doing, right? If they've got experience with like tokenomics and launching tokens, and what's their track record and what have they launched historically, right? I think that's also quite valuable. If you're talking about on the product side, I think a lot of things are, well, how do you scale that product? How do you go launch it to market? How do you go help build customers and sales and revenues for this business? I think that's important. And then there's going to be, investors that can help bring in later stage investors or other stage investors, as the company progresses, right? So you're at seed round, well, then you're going to need Series A in a little while, right? So who's going to help you to go do that effectively, right? So I think these are all very important things. From Blockchain Founders Fund perspective, I mean, we coordinate with about 310 funds now on a weekly basis. And so, when we're looking at like, how do we go help, our companies go raise capital and, go get, key strategic investors also backing it alongside us, like that's something we can drive a lot of value, right? When we talk about, for example, how do we go drive revenues and bring customers, also something we can drive a lot of value on, right? And then of course on the entire like token front and all those different aspects of it, right? So, you got to know which funds you're talking to, what they actually do. Do they have bandwidth and capacity? Have they set up internally to actually scale these functions effectively? And those are the types of things you should be asking, right? Feel free to go ask, startups that have worked with those funds, right? It's a really good way to figure out like which funds are actually adding more value.
And with that, like, so investing is one thing for a project, but regulations plays a major role. So, like, what countries project should register their company, or like which are crypto regulation free or crypto regulation friendly countries?
Yeah, so this is a good question. So I think this is an interesting one. I think there's some misconceptions here, right? And so, for example, blockchain itself is not like a regulated topic, let's say, right? So like if you're thinking about like, to me, blockchain and building on a blockchain, for example, is very similar to say like using Excel. Like no country has banned Excel in the same way that like no country is banning like blockchain, right? Where there's some challenges around like the crypto aspect and like the financial aspects around that, and like say securities laws or whether it's fundraising or like other aspects around this where like a lot of those laws are coming into place, right? So it's important to distinguish between the two. And if you think about sort of the most standard jurisdictions to launch a company, it's going to be similar if you're in that blockchain category, right? So the most standard jurisdictions to launch a company are going to be like Delaware, London, and then it's going to be like Singapore, right? Those are kind of the main ones generally because the strength of their IP rules and like court of law and like things like that. Of course, there's other great countries, all across the world that you can launch, IP and launch a company. Then from a token perspective, I mean, this varies a little bit, and I think there's a lot of gray areas, and so you got to be careful. Obviously, you got to go look at sort of what sort of the latest, advice. You can always go to, different sort of leading, figures in the space around like the legal side or compliance side, et cetera. I think it depends on your business though, right? So, certain businesses are going to need financial licenses or licenses that they go acquire. And that's going to depend on, what country does that make sense in, right? Depending on what you're doing, there's going to be a lot of different answers to this question though, because it's very specific on, what are you actually building, who's licensing it, or do you need licensing? Does it make sense, et cetera?
So everything, it's not just about registration, but the licensing also plays a role.
Right.
So with that, like, just to like, as this whole conversation was about funding and everything, so on average out, what is the timeline a company gets funded? So for example, if an XYZ project is going to be like you are reviewing it, so how much time it takes to get it fund or like clearing the funds base?
Yeah, I mean, it really depends, I think, in a few respects, right? So there's a couple of factors. One is, how many companies is that, fund looking at, and where do they sort of prioritize or where do they see it, right? Part of it might be the urgency around the round, right? If there's no other investors in, the urgency is probably lower. If the round is like nearly completed and wrapping up, the urgency is faster. So like, in some cases, we're making decisions in less than a week, right? The same week we're making a decision. In some cases, it might be like 2-3 weeks, right? It's generally not super long. I think where it does extend for most funds is when like the company itself is not organized. So for example, if you talk to a startup founder and you have a great conversation and then they don't share like a data room after, right? Then the challenge is like, well, all the things that you need to validate, you're going to need to go ask one by one. So you're going to have to like look through some stuff, then figure out exactly what questions, go ask one by one. They send you a data room that's already got support for, any of the traction points, any of the things you discuss. They have their registration docs, and they're like all the stuff that you're going to need as an investor. Then, it's going to be a lot faster because a lot of your questions are already answered before you need to ask them. And so it's like these types of things that are going to like really shrink that timeline significantly when you're due diligencing a company.
So I think we have covered a lot of things related to funding and how the funding process works. If anyone wants to connect to Blockchain Founders Fund, I think you have given how it works. We'll also add the inputs about it, how someone can apply for Blockchain Founders Fund. With that, some practical tips, final conversation points for the full audience.
Yeah, definitely. I mean, reach out to us, right? If you're building something exciting that you want to share, reach out to us, right? So you can reach out to us at blockchainff.com. You can share information directly with us there. You can reach out to any of our partners individually on pretty much any social media, whether it's Twitter or LinkedIn or others. Or we've got a ton of experts, right? We've got 300 plus experts that support our companies that if you were to reach out to any of them, they can share it with us. A lot of investors that we co-invest with, a lot of angels that we also invest with a fair bit, that, there's a lot of people that's very easy to sort of reach out and get to us. And I think that's a similar thing for other funds. I think one thing that maybe makes us a bit more unique is we review every single company that shares info with us, right? So, it doesn't matter if you apply on our website or otherwise, like we do look at it. And we're happy to sort of explore, if it's a good fit. And of course we can't invest in everything, but I think a big part of as a startup founder is finding like who the investor that's the right fit for you is as well.
Thank you for your insights, Ali. It was great talking to you. Have a nice day, man.
My pleasure. Thanks so much.